Mortgage rates will be lower this summer, and I'm going to tell you why. Hey there, my name is Ryan Skaggs, and this is the Mortgage Minute. This channel is dedicated to everything mortgage, real estate, and interest rates. We're going to start with those interest rates. We had a Fed meeting this past week. It's now mid to late March. That Fed meeting, they raised the Fed funds rate by 0.25%. That was widely known and expected. And guess what? When people do what they say they're going to do, we are all very happy about it. And that's exactly what the market said when the Fed raised rates by 0.25%. Now, since we knew that was coming and we expected it to happen and they did not surprise us, the market rallied. And when I say the market, mortgage interest rates declined. Second straight week here, we're now down to 6.42% on the average 30-year fixed. Our high was 7.08 in fall of last year, right around that October-November time at that 7.08. So now we're a full 0.5% below that time. So where will rates go? Well, it's going to be interesting to see. If you want to see where rates have been, check out that link below. I've got a link to Freddie Mac's average 30-year fixed survey that comes out on a weekly basis right down there in the description. While you're down there, hit that like button, hit that subscribe, and click that bell icon to be notified as I'm putting out weekly videos on the channel. Now, before I tell you why interest rates are going to be lower this summer, I want you to put a comment below. Where do you think they're going to be June 30th, July 1st? So as we get into that June-July timeframe, I want you to put your guess right down below. 7.08, 6.42, 5.79. Did I catch a niner in there? Were you calling from a walkie-talkie? I don't know. But I want you to put your comments below. I'd love to see where you think it's going to be. I'm going to pin my comment and come back around here June 30th, July 1st, and be able to see where we're at. Now, let's talk about why I believe interest rates are going to be lower this summer. Now, the Fed has said the banking crisis is looming and scary, and they're going to need to keep more money on the balance sheet. And I'm going to show you a quick chart here. They absolutely are doing that. They're keeping a lot more money on the balance sheet, as you can see from this chart. So that is going to tell me that they're going to likely not raise rates in the future, if not potentially start to take the decline in rates. They're going to start to reduce their Fed funds rate. Now, the reason I believe that is because I believe everybody else that's looking at this. Let me show you this chart. This is what the market is pricing in for the Fed funds rate for the remainder of this year going into January of 2024. So as you can see here, the Fed funds rate, or the market, is expecting that Fed funds rate to decline. That means the overall market is assuming that the Fed is going to decline or move their Fed funds rate down. That will likely correlate back into the mortgage markets and be able to show a lower rate later this summer. So that is a couple of the things of why I believe we're going to see lower rates this summer. Now, will it be refi time where everybody that's bought in the last year be able to refinance? Maybe not all the way there yet. That might be another year before we get to that point. But with that said, my expectation or hypothesis is that we will see lower rates from where we're at now, likely closer to that kind of 6 flat mark by this summer. So time will tell on that. So last but not least, if you haven't hit that subscribe, please do so. Putting out weekly videos on the channel. Put your comments below on where you think that average 30-year fix is going to be. Stay safe, and we'll see each other again very, very soon.